Hello, this is SowaanERP. In this video, we are going to talk about capital expenditures booking. Within asset module, you can book your assets in CWIP, where all those repairs or the capital expenses which you book by the time can be booked for a particular asset and can serve the value addition purposes for a particular asset. So I'm going to run you an example where we will first request an asset and we'll run through the purchasing cycle that is going to throw a new asset within asset list, and that is where I'll show you how you can book an asset, and based on that particular asset, how those further capital expenditures are going to be contributed in the age and value of that particular asset. So here in asset module, you can see a capex request form is there, and workflow is applied on this. And initially, you can raise this form with some credentials where I'm requesting a car, like a fixed asset with a value of 10 million rupees, and that is run on a workflow where the capex is raised, and then finally PR is approved, leading towards the purchase order, and then purchase order is going to be awarded to a particular supplier, and the same thing is run through a workflow leading towards the GRN, where asset location has been defined, and the particular asset is fallen automatically in asset list. Asset location is exists here in the item line, where you need to nominate a place where you are receiving this particular asset. This GRN is going to go and hit the accounting for the first time during the process, and you can see to it as the CWIP account, which is hit currently with the value of the asset, and a temporary liability account which is serving the provisioning purpose, and going to be knocked off at the time of invoicing to settle the supplier. But this thing is going to be eliminated by the time you mature an asset. So currently it is CWIP and waiting to be an asset to be mature on further on the process channel. So this was the GRN, and if I go into the particular asset, that asset was fallen automatically at the time of the GRN, while the particular Honda Civic car is handed over, and that is where you can name with a number, or a particular asset name can be tagged to that particular asset, and that is there with the relevant purchasing details, and the initial purchase cost of the asset is booked, and that is what was initially the scope of the asset, and we defined the depreciation mechanism and book the asset. And by the time we submit the asset, system has hit ledger debiting you see the particular fixed asset account, and knocking off the CWIP, because at this point of time the CWIP has been settled with relevant fixed asset GL account, and that is when the asset is mature. But still there are expenses that you may require to be record as a capex, and that is where the capex recording function is come into play. For example, there is a car where there is a registration expense that needs to be booked, and for this you actually need to book it by raising a purchase invoice in the name of a supplier, those who are helping you to get registered the car with the authorities, and that particular expense is going to be knocking off a GL particular expense account, against which uh, in the debit side, a particular GL expense account in the debit side at the time of purchase invoice for booking that particular registration expense of the car here, but that particular expense is going to be settling the same expense account in the first place, like this. The same purchase invoice has to be capitalized for this particular asset by booking this capital expenditure recording form, where the accounting is knocking off the same GL expense account in the credit side and bringing up and top up that particular fixed asset account in this with the same value. So this was the particular GLA expense account booked at the time of purchase invoice for booking the registration expense for the same car, and it is knocked off here in this capex recording, and the same value is topping up and adding, bringing the addition in the value of the fixed asset itself in relevant GL account, which is in fact coming right from the asset category. So this is in fact capex recording accounting impact, and this has contributed towards the fixed asset, uh, updating the asset record itself other than the purchase value as an additional cost borne apart from the purchase value. So you see there are two expenses in fact. The one is for 12,000, the other one is for 1,000. 1,000 is for registration and 12,000 is for motor vehicle tax, and those two expenses which I capitalize to increase the capitalize for the same asset, increasing the value of the same asset as an additional cost, contributing and making up the total asset cost as this much. Yani purchase value, including the additional cost, additional expenses borne during the course, which I have capitalized, bringing up the total value of as of this much. So, meanwhile, by the time you start recording the depreciation, system is not going to go back into these dates if there are depreciation are already recorded. All those capital expenditures recorded on a particular date is going to be making up an addition for the same asset after any period already recorded the depreciation expense for the same asset from the date and onwards. Like we have already recorded the depreciations, JVs are fallen automatically for this point of time, and the expenses which we incurred as the capex are going to be contributing starting from this day and onwards, reaching up to to depreciate the asset with the full value, remaining with no scrap value or salvage value of the same asset. So there is the total cost scrapped here in this case, matching with this particular value, and this is what was the in fact the capital expenditures borne, which we have capitalized by running the capex form in there. So this is how you can do so. You can work with the capital expenditures within the asset module.